Today, let's dive into the Pi Network, a project with a bold vision to make cryptocurrency accessible to everyone, not just tech experts or early adopters. In a world where digital currencies can seem intimidating or out of reach, Pi aims to break down those barriers and invite people from all walks of life to participate in the future of money. Founded by a team of Stanford graduates, Pi Network lets you mine coins right from your phone without draining your battery or eating up your data plan. Unlike traditional cryptocurrencies that require expensive hardware and technical know-how, Pi is designed for simplicity and inclusivity. All you need is a smartphone and a few seconds each day. The focus? Build a massive, global community first, then work together to grow the currency's value. Pi believes that the strength of any currency lies in the people who use it, so their mission is to empower millions to join, connect, and collaborate. It's about creating a movement, not just a coin. Getting started is incredibly easy. Just download the app, become a pioneer, and tap a button once a day to collect Pi. There's no need for complicated setup or technical skills. The app guides you step by step, making it simple for anyone to join, whether you're a student, a professional, or just curious about crypto. Unlike traditional mining, which can be energy-hungry and expensive, Pi's system is energy-light and fair. It rewards those who help the network grow and stay secure, all while using minimal resources. You don't need to worry about your phone overheating or your electricity bill skyrocketing. Pi is designed to be sustainable and accessible for everyone. Within Pi, users can take on different roles. You can be a pioneer, simply mining daily, a contributor by adding trusted people to your security circle, or an ambassador by inviting others to join. Each role helps strengthen the network and increases your earning potential, making Pi a truly collaborative effort. The more you contribute, the more Pi you earn. But there's a catch. As more people join, the mining rate halves, making coins scarcer over time. This built-in scarcity is designed to encourage early participation and reward those who help the network grow from the very beginning. For years, Pi operated in what's called an enclosed network. You could collect coins, watch your balance grow, and invite friends. But you couldn't trade or spend your Pi just yet. This waiting period was crucial for building a strong foundation. This phase was all about building trust, testing the system, and preparing for real-world value. Developers worked behind the scenes to ensure the technology was secure, scalable, and ready for millions of users. The community's patience and participation helped shape the future of the network. Millions joined the movement, tapping daily, inviting friends, and waiting for Pi's next big step. The excitement grew as the community watched their coins accumulate, all while anticipating what would come next. The stage was set for something much bigger, a transition from a simple app to a global digital currency ready to make its mark on the world. In late 2024, Pi Network's ownership moved from Social Chain Inc. to the Pi Community Company, based in the Cayman Islands. This strategic move gave Pi regulatory flexibility and signaled its readiness for global expansion. The new structure made Pi more professional and community-focused, building trust with users and potential partners. In March 2024, Pi's logo was trademarked in the US, protecting its brand and identity. These changes showed Pi was serious about its future, laying the groundwork for open market trading. For pioneers, it was a clear sign. Pi was evolving from an experiment to a legitimate global crypto project. The foundation was set for Pi's biggest chapter yet. February 2025 marked a turning point in the world of digital currency. Pi Network officially launched its mainnet, a moment that many had been eagerly anticipating for years. This wasn't just another technical milestone. It was the culmination of a global movement, uniting millions of users who had believed in the project from its earliest days. The transition from a closed test environment to a fully live blockchain was a massive leap forward. Developers, engineers, and community members had worked tirelessly to ensure the network was secure, scalable, and ready for real-world use. For the first time, Pi coins that users had collected in the app became real, tradable cryptocurrency. What once felt like a distant promise was now a tangible asset, opening up a world of new possibilities for pioneers everywhere. To make this transition, users completed KYC verification, a crucial step to transfer their Pi to the mainnet wallet. This process ensured that each user's coins were truly theirs, protected and secure, and ready for use in the new ecosystem. For the very first time, pioneers could send, receive, and eventually trade Pi on exchanges, connecting with a global network of users and participating in a real, functioning economy. The mainnet launch sparked a surge of excitement. Pi debuted at $184, and within days, its price nearly doubled, climbing to almost $3. The community watched in awe as their patience and dedication were finally rewarded. Years of patience, hope, and hard work paid off as users saw real value for their efforts. For many, it was a life-changing moment, validating their belief in the project and the power of decentralized technology. But with these new opportunities came new responsibilities: managing digital wallets, understanding transaction fees, and learning how to keep their assets safe in a rapidly evolving landscape. Navigating a live crypto market was a new experience for many, requiring users to stay informed, adapt quickly, and make smart decisions as the value of Pi fluctuated. The mainnet wasn't the end of the story, it was just the beginning of Pi's journey in the open market, a new chapter filled with both promise and challenge. The community's belief and commitment were finally being tested in the real world, as Pi moved from theory to practice and from vision to reality. The dream of using digital currency for everyday transactions, like buying coffee or paying for services, was closer than ever before, inspiring hope for a more inclusive financial future. Yet Pi's next challenge was clear: proving its value beyond the initial hype and showing the world that it could become a true force in the digital economy. The adventure had truly begun, and the world was watching to see what Pi Network would achieve next. Pi's price soared to nearly $3 in its first week, fueled by years of anticipation and media buzz. But as with many new coins, early excitement faded fast. Early adopters cashed out, increasing supply and driving the price down. By October, Pi hit a low of just 0.15, a tough blow for many. The mood shifted from euphoria to caution as reality set in. This boom and bust cycle is classic in crypto, testing the resolve of even the most loyal supporters. Now, Pi had to prove its worth through real utility, not just hype. The community watched closely, waiting for the next move. Why did Pi's price fall so sharply? It's a question on every investor's mind, and the answer isn't as simple as it might seem at first glance. The story behind the dip is a mix of technical, psychological, and fundamental factors that all collided at once. The main culprit: token unlocks. When a large number of tokens are suddenly made available, it can flood the market. In Pi's case, this happened as part of a scheduled release, but the impact was dramatic. As more users completed KYC, millions of new Pi tokens hit the market, creating heavy selling pressure. Many early holders, eager to cash out, rushed to sell their tokens, overwhelming the available demand. Technical factors made things worse. When Pi broke key support levels, traders and bots sold off, accelerating the decline. Automated trading systems triggered even more selling, creating a feedback loop that pushed prices lower. Legal troubles added uncertainty, with a U.S. lawsuit raising concerns about project management. Regulatory fears can shake investor confidence, making people hesitant to buy or hold. Low trading volume and weak demand meant few buyers to absorb the new supply. When there aren't enough buyers, even a small wave of selling can cause prices to tumble quickly. The Fear and Greed Index hit extreme fear, reflecting widespread pessimism. When fear takes over, investors often panic sell, making the situation even worse. All these factors combined into a perfect storm for Pi's price. Negative headlines, technical breakdowns, and a flood of new tokens all hit at once, driving the price down sharply. The lesson: price is driven by supply, demand, and trust. When trust is shaken and supply overwhelms demand, prices inevitably fall. For Pi, rebuilding confidence was now the top priority. The team needed to communicate clearly, address concerns, and show a path forward to regain trust. The project needed more than just hope, it needed real progress, transparency, and a renewed commitment to its vision. Only then could Pi begin to recover from the storm. Despite price struggles, 2025 was a breakthrough year for Pi's development. The Pi 2.0 upgrade launched in November, transforming Pi into a practical currency for daily use. Key features included on-chain payments, letting merchants accept Pi directly, and escrow services for safer transactions. Over 140,000 merchants and 2 million users joined the new platform within weeks. Multilingual access made Pi more inclusive for its global community. The focus shifted from speculation to real-world utility. Pi 2.0 laid the foundation for a digital economy powered by everyday transactions. The team's commitment to usability and adoption was clear. Real progress was finally taking center stage. In 2025, Pi rolled out major improvements for security and usability. AI-powered KYC sped up verification, helping millions migrate to the mainnet. The new passkey feature secured wallets with biometrics, making accounts safer and easier to access. Pi achieved full compliance with the EU's MiCA regulation, opening doors to European markets and partnerships. The testnet advanced to protocol version 22, with a decentralized exchange and automated market maker in testing. These upgrades showed Pi's commitment to building a secure, advanced ecosystem. The focus? Make Pi safer, faster, and more useful for everyone. Regulatory clarity and technical progress boosted Pi's credibility. The groundwork for a thriving digital economy was being laid. Pi was evolving into a serious player in the crypto world. As of December 2025, Pi trades at around $0.20, far from its peak, with market sentiment still bearish. The circulating supply has ballooned, keeping short-term prices under pressure. Yet, analysts predict gradual recovery, 0.41 in 2026, 0.58 in 2027, and possibly 1.87 by 2030. With a max supply of 100 billion coins, explosive price growth is unlikely without massive adoption. The real driver will be utility. If millions use Pi for real transactions, value will follow. The current low price reflects uncertainty, but ongoing development offers hope. Pi's future depends on building a vibrant ecosystem, not just speculation. The race is on. Can Pi create value faster than the market sells it? The next few years will be crucial. So what should you do as a Pi pioneer? Stay informed, follow official updates and avoid rumors. Complete your KYC to move your Pi to the mainnet and set up your wallet securely. Use the new passkey feature and protect your passphrase. Explore the growing Pi ecosystem. Over 140,000 merchants now accept Pi. Spend Pi where you can. Real usage supports the network's value. Be patient. Crypto is volatile, and Pi's journey is just beginning. Focus on long-term growth, not short-term price swings. Support the network, secure your assets, and watch the ecosystem mature. You're part of building something new. Stick with it as Pi evolves.